Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis here on the Quant chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Quant has continued to hold below the 20-day MA here on the 1 hour chart, which is now acting as a resistance for us to continue gearing up. We are also holding above a key area of support at around the $110.3 mark, which is now acting as support for us to continue gearing up. And in this video, I want to start by first showing you a chart pattern that we have information over here that could possibly give us a bit of a breakdown to the lower side. And that chart pattern is a double top. And if I draw it out, you can see that here on the charts we have a common top at around the $109.5 mark, and I can mark the tops using that yellow target area. And if I draw out the chart pattern, we can have these as the first top, then the neckline, then the second top, and there are chances that we are going to see a bit of a breakdown to the lower side out of this chart pattern to the lower side. And this is a chart pattern that breaks to the lower side, having the minimum target area for the breakout being given by the height between the tops and the neckline, and we can get that height and then place it below the neckline, giving me a minimum target area at around the $103.6 mark. And there are high chances that Quant is going to continue seeing further breakdown, since at the time of this recording we are seeing a bit of a weakness to the lower side, and maybe at some point fully maximize our target area at around the $103.7 mark. Then from there we can try and find support at around the $102.5 mark, where we could possibly get another bounce back to the upper side. And that is what I'm expecting, basing it on this chart pattern over here. And to give you my analysis basing it on the Elliot wave structures, I'll be jumping to the 4 hour chart, because I believe the Elliot wave structures here on the Quant chart are better seen here on the 4 hour chart. So here on the 4 hour chart, you can see that after seeing our bear market low at around the $40.1 mark, we started seeing higher prices obeying the Elliot wave structures, where we picked in a 5 wave move, completing the formation of these larger Elliot wave count 1. Then we started a corrective structure in the formation of a larger Elliot wave count 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area for that second wave between the fib level 0.5 and the fib level 0.78, the area highlighted here on the charts using this red target area, which lies between the $134.9 mark and the $80.7 mark. And it is within this red target area that I've been expecting to see the low for this second wave. And in the formation of this wave 2, which is a corrective wave, I have also been expecting to see an ABC corrective structure also play out, where you can see that on the chart I'm terming this as the wave A, then a wave B giving us a peak at around the $165.5 mark. And I'm now expecting one more leg down in the formation of this wave C to fully maximize our red target area in the formation of these higher Elliot wave count 2. And there are chances that in case we see a breakout out of the chart pattern that I have just shown you, continue seeing further breakdown, lose significant areas of support, and maybe at some point we lose the $100.3 mark, then there are high chances that Quant is going to continue seeing further breakdown, get back into the $80-point-something range, and fully maximize our red target area in the formation of this wave 2. And that has been my primary scenario here on the Quant chart, where I'm still expecting one more leg down in the formation of this wave C to fully maximize our red target area in the formation of these higher Elliot wave count 2. So we need to have that in mind, have those breakdown targets, and also continue watching those significant areas of support. Also taking a look at the indicators on the 4 hour RSI, we are trading at around the 47 mark, meaning we have massive room for us to fully support higher prices, and any further breakdown will still be supported on the RSI. Also, taking a look at the MACD, we have been able to print a bearish cross suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.